How much cash do you have right now in the portfolio?
Very little, Tom.
Well, come on. 4, 5, 42%.
Less than 5%.
Less than 5%.
Yes.
Explain to the gloom crew out there how you can do that every day. What is the behavioral construct that allows you've been right about this equity market. How can you be 96% in this market?
Just the history of understanding the futility of market timing goes a long way towards that. Now, having said that, we've had a tremendous move in this stock market coming out of the 09 bottom, where the S&P was 666. Today, it's around 2,500. We have to respect that. We have to respect the duration of this rally. We have to expect the length of this economic expansion. Stock valuations are not cheap. The Fed's beginning to tighten. So while it's been reasonably easy to stay fully invested up until now, I think it's going to become more challenging in the year ahead.
Challenging why, Howard? Or what are the challenges and how can you protect yourself from these challenges?
Well, Francine, I think the big thing goes back to monetary policy and the Fed. The Fed has been clearly very helpful to the equity markets since it began its process of quantitative easing and ultra-easy monetary policy. That's all changing. The Fed has tightened 4 times. They're going to tighten a 5th time in December, so they hint strongly. Next month, next week, they begin the process of letting their bonds start to roll off their balance sheet. Quantitative tightening, if you want to call it that. So if quantitative easing and ultra-accommodative monetary policy was very positive for the stock market and the economy, and it clearly was, then when we start to move the other way, at some point, that's going to become a bigger and bigger problem for the stock market.